it's a question, I think, of what you hoard. Now, you're prevented really from hoarding huge amounts of cash because your bank is instructed by the central bank not to permit you to do it. This is under the guise, if you like, of money laundering and all the rest of it. But the fact of the matter is that the last thing central banks want to see are people queuing around the block to take the money out of a bank. They would rather that you just did an electronic transfer from one bank account to another. They can handle that through the wholesale markets, but they can't handle a queue around the block trying to take physical cash out.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
It seems so hard to order. Who can I trust, and how do I even start?
Oh, you just go to sdbullion.com/rp, pick out whatever gold or silver you want, add it to your cart, you can check out, and it's on its way. And they're A+ rated by the Better Business Bureau.
Wow, it's that easy?
Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/rp. Welcome back, Reluctant Preppers. We're delighted to have this returning guest who brings an international perspective to your questions. Alasdair Macleod is the head of research at goldmoney.com. He joins us here on Tuesday, June 18th, 2019. Alasdair, thank you for joining us on Reluctant Preppers.
That's very much my pleasure, Donegan.
We wonder if you could start us off with the big picture as you see it as an analyst of the global economy. We've heard even some big name banks such as Morgan Stanley announced that it appears that the world is in a global recession. That's been talked about for some time by those in the independent media, but until recently denied by those in official places of influence. So can you talk to us about what you see happening on the global economy and what you think the reality is behind all that?
Yes, certainly. I think when it comes to looking at the global economy, there are two things which are working in tandem to lead to a very deep recession. The first is the credit cycle, which is something that I'm afraid we've rather got used to. But the second thing on top of it is trade protectionism. Now, the last time this happened was in 1929 when the Smoot-Hawley Tariff Act was introduced, right at the top of the credit cycle in 1929. And that led to a collapse in the stock market between 1929 and 1932, when the Dow Jones lost nearly 90% of its value. So that is the background. Now, that is really quite frightening. I have expected a recession to become increasingly evident in the early part of 2019, and indeed it has become increasingly evident. I think that the larger banks are beginning also to see this. Now, what they tend to do is they look at the statistics, and they see the statistics. So after the event, they say, that something has happened. Now, we have been able to foresee this. So what we're now seeing is the evidence that indeed the global economy is entering a period of recession. Now, the question is how deep. I would argue that the 1929-32 parallel suggests that this recession, global recession, will actually be quite deep. Now, I think the important effect on America and the effect on all of us, because the dollar is the reserve currency, the important effect on America is that her budget deficit starts from a baseline of over $1 trillion this year. Now, if you put a recession on top of that, and indeed a steep recession, you're going to see the budget deficit increase very, very substantially. Now, this is at a time when, as the recession comes about, foreigners start reducing their dollar holdings. Now, bear in mind that the total amount of foreign-owned dollars in your economy, and we're looking at not just dollars. I mean, dollars, I think, in terms of bank balances through correspondent banks, are around about $4.5 trillion. You have got a further 18 trillion odd dollars of US Treasury investments, T-bills, investment in US equities, and direct investment in property and unlisted US corporations. So you can see that the foreign involvement is extremely high and has been predicated on continuing expanding international trade. Now that that is no longer happening, the foreigners are inclined to be net sellers. And we have seen these through the TIC figures, the Treasury International Capital figures released frequently by the US Treasury. So the US Treasury is aware of what these flows are doing. Now, at the same time, they face an extremely rapid expansion in the budget deficit and therefore the necessity to have foreigners continue to buy at an accelerated pace US Treasuries. If that's not going to happen, then you've got a massive crisis developing in America. It's a government funding crisis. So this cannot be allowed to happen. And I think increasingly this is informing America's foreign policy. And it is why she is attacking Hong Kong as the weak point for China. Now, the reason Hong Kong matters is that it is through Hong Kong that the Shanghai Connect avenue operates, which allows foreign investment to go into China. China has been preparing her economy for the next phase of expansion. She has reduced a lot of, shadow banking debt and all the rest of it, and is now beginning to expand her credit again with a view to, if you like, increasing the amount of inward investment into China for infrastructure, for business development, and so on and so forth. America cannot afford to have international portfolio flows from sovereign wealth funds, central banks, commercial banks, insurance companies, and pension funds go into China to support her trans-Asian infrastructure plans. She needs those flows to be diverted to herself. And that is why she's attacking Hong Kong at the moment. And this is a big, big problem for China. At the same time, the situation against Iran is escalating, and that's another problem. But it is likely, as the situation deteriorates in the Gulf, it is likely to drive the dollar up compared to other currencies, simply because the US dollar is seen in the fiat currency world as a safe haven. Now, if you get a rising currency, obviously you're going to affect where those flows go, where the international capital flows go. So you can see that they're if you like, trying to kill the prospects for China, for investment in China, and at the same time, coincidentally, you do have an increased possibility of a new war in the Persian Gulf. So what this means is that there is a very, very big battle going on, which nobody really fully understands. And it boils down to one simple thing, and that is that America needs those global portfolio flows to finance her increasing budget deficit. And the rest of us can go to hell.
You've touched on trade wars and the global economic situation in there. Could you circle closer to home and tell us about what's going on with the Eurozone and specifically the Britain exit from the Eurozone?
Well, there are two aspects of this. If I start with the Eurozone itself, the Eurozone in a recession will be in enormous difficulty. Not only will spendthrift governments end up spending an awful lot more, which will have to be financed through possibly even deeper negative interest rates, new QE and all the rest of it. But you've already got a lot of political discontent arising in places like Italy and so on and so forth. So the EU is going to have its work cut out trying to keep the whole thing together. Now, Brexit is in a sense a part of this. Now, where we are with it is that very shortly it appears, barring accidents, that our next Prime Minister will be Boris Johnson. Now, Boris is a free marketeer, basically. He understands classical economics. I wouldn't say he's an economist, but the direction in which he is going to go, I think, is quite simple, and that is a hard Brexit. He cannot admit to a hard Brexit because politically that is death in a parliament which is dominated by Remainers. But I'm convinced that that basically is where he will go. So we will get a hard Brexit. He will go and talk to the EU as soon as he's elected and say, these are my terms. And if you don't like it, we're out on the 31st of October. So that is basically how it will be. We will be playing from a position of strength as opposed to a damage limitation exercise, which was Theresa May's approach. So that's where we are. I think very shortly Brexit will. Boris will be in position, and there is nothing Parliament can actually do to stop a no-deal Brexit, because that is the law, as it were. That is definitely the law. So that's where we are with that. It's coming at quite a difficult time, particularly given the global situation with China, because China some time ago set up a link between Hong Kong and London to develop her international yuan ambitions, her international, her non-domestic currency ambitions. We are being asked by America basically to go on, to stay on side with them and to work against China. I mean, for example, on the technological side, questions have been raised about Huawei and whether they're actually acting as spies for the Chinese government.
Right.
So all these issues are going to be actually at a very, very difficult time when Boris Johnson comes in. He has already got that link with China. He's going to walk a narrow line between that and President Trump, who thinks he's the best candidate to be prime minister here. That by some may not be taken as an endorsement. But anyway, at the same time, there is no doubt that one of the priorities will be for Britain and America to come together rapidly for a trade agreement. So you can see that there's quite a lot riding on the current situation. It is quite complex.
Now, yes. So speaking of the what's riding on it, what do you foresee if the Brexit is to happen? Say, for example, this fall. How do you see that impacting either the UK itself or the Eurozone?
Well, it's an interesting question because there can be little doubt to anyone who actually understands economics that free trade is the best way of creating wealth in any economy. It is the best deployment of capital, best way to deploy capital, and so on and so forth. However, that is not the way our fiat currency world looks at it. And I think the immediate impact is that we are worrying, if you like, about sterling and, having sort of cast ourselves off from the EU, the fear is that sterling against the dollar will dip down to about 120. What it'll do against the euro, I don't know. I think it will probably have a worse effect on the euro in time. But you can see the gut reaction is that there is, if you like, an increased fear of the unknown in currency markets. And I would expect sterling to fall from the current level, which is around about 126 to the dollar, down to around about 120. Maybe down to 118. After that, I think you buy the socks off sterling, personally. But that would be my view at the moment. But obviously, it's something that evolves over time. Other than that, I think that if we do have a clean Brexit, then relatively speaking, Britain should do, I think, very, very well. Now, having said that, if we're heading into this massive global recession, I'm going back to the 1929-1932 parallel, then basically, the UK economy will also be very, very badly affected. It's bound to be. Nobody's going to get away with this one at all. But we're probably, I think with, sort of a freer market attitude, we will have the potential to recover a lot more quickly than, say, the European countries, who I would say are going to be in very, very deep trouble. And I can see a banking crisis potentially starting in Europe as well. We've already seen Deutsche Bank announced over the weekend a 50 billion euro bad bank, which, why not put the lot in it is my response to that. But you can see that there are systemic issues in Europe, which I think are likely to be exacerbated by Brexit and exacerbated by the global trade situation. We have those problems to a degree as well. And like any other jurisdiction, our regulators have come up with some sort of, if you like, they've tried to come up with an answer to the bank's poor levels of capitalization by taking an optimistic view of how things are likely to turn out in another recession. And I think that optimistic view could well be badly challenged.
If we could turn our attention to the cryptocurrency space, it's certainly been a interesting ride over the past couple of years with skyrocket about a year and a half ago, and now what was considered a bit of a bear market for the past year and a half, but now in the last, actually, if you look over the last 6 months to a year, undeniable resurgence in the crypto space, especially recently. Do you foresee, and you've talked to us a couple of times about this in the past, about how there are waves in capital markets and how this one has a broader reach than previous potential mania markets have had in the past. Do you see a confirmation in what the recent action is in these market behaviors that you had talked to us about in the past?
Yes, I certainly do. It is interesting observing it from that point of view. Before your listeners, if I can just sort of summarize very briefly, the first wave is where the geeks get in, and the people who really know what's going on, and obviously as that wave progresses, you'll get sort of some people who are not the original geeks and all the rest of it playing it, and that was quite spectacular. There is a second wave, and I think we're in the beginning of that, and that is when it goes mainstream. And I think if you want evidence that this is going mainstream, there are now regulated futures which will allow institutions to play Bitcoin. You've also got Facebook has announced the use of a new cryptocurrency for payments, and that's being backed by some of the biggest names in the business. Now, this is not like a Bitcoin. It's not going to attract speculative money, because the idea, as I understand it, is it is going to be tied to fiat currencies in terms of value. So the thing about Bitcoin is that it's rapidly becoming, I think, probably the most important game in town for anyone who doesn't have exposure to it. So this has got the potential, with its limited supply, actually to run quite a long way. So on that basis, I am a bull of the better cryptos, particularly Bitcoin. But I think we should bear in mind that it is immensely speculative, and furthermore, the status of a cryptocurrency like Bitcoin as money is that it is actually no more money than a currency, a government-issued currency. It is nowhere near the status of gold or silver. But having said that, it's characteristics of supply that make it so attractive to speculators who, by increasing their number and the quantity that they buy, can just drive up the price. So I can see a bubble developing in this, which is going to be potentially, I think, the biggest bubble we've ever seen.
If we could turn our attention now to viewers' questions. We've had several submitted ahead of this interview, and there's a lot of interest on the part of viewers on your perspective on things, especially given your sort of international focus. Curtis Abbott asks, if a country nationalized all their gold mines, would shareholders get compensated with a market price per share, or would it be likely the government would just take the mine if gold became a national interest due to a change of monetary regime?
That, I think, is probably down to the individual governments. There is no way that we can force, say, I don't know, think of an example, the Venezuelan government to compensate people for loss of equity in a gold mine. Now, having said that, in the more general sense, the internationalization of investment, which has been particularly the feature of the last 30 years, means that any country which just nationalizes mines like that is likely to find that it is completely cut out from international financial markets. So there is quite a lot of pressure on states not to do that. But it's not something that I would rely on. I don't think I would rely on compensation. I think that Uh, I mean, particularly since it's likely to be on government's terms rather than fairer, independent terms. I hope that answers Curtis's question.
Mm-hmm. Yeah, we have another question from Hugh Sinclair, who asks, at what point does Mr. Macleod think that people in general will lose their confidence in central banks and their policies, since most people are complacent and completely unaware of the dangers of the monetary system? What does it take?
I think it's a very good question. I wrote about this last Thursday, and if you go onto the Gold Money website, you'll see an article I wrote about inflation. I think that the time is approaching when if you like, full faith and credit in currencies like the dollar, unbacked by anything other than that full faith and credit. I think that is going to be challenged. Now, the reason I think it's going to be challenged is that I can see a massive monetary expansion as a result of central banks' policies to try and deal with the upcoming recession. Remember that we have a credit cycle, and in that credit cycle, you start printing like fury if you're a central bank to try and rescue the economy. That's the official reason you do it, but the unofficial reason you do it is basically to fund the government's deficit. And with government deficits rocketing everywhere, I think that the purchasing power of paper currencies is going to be questioned. We had this before, incidentally, back in the 1970s, when a condition which was dubbed stagflation came about. And that was a combination of seeing falling demand in an economy and at the same time prices rising. Of course, what people find difficult to put together is the concept that if you look at the price of anything measured in money, the changes begin to come from the money side, not from the goods side. So that if you start losing purchasing power in money, then you don't need to see an increase in demand for the good that you're talking about in order to drive up its price. The price is being driven up by the loss of purchasing power in the currency. And I think that on this next credit cycle, that is roughly that's what we're going to see.
We have a question from H. Paul Fuchs, who says, all the analysts I respect agree that gold and silver will explode upward in purchasing power when the, quote, reset occurs. Manarino, Willie, and others believe that silver will outperform gold, at least for a few years, because its price in fiat has been more brutally suppressed by the cabal than gold, with the current 90-to-1 fake market prices. Lynette Zhang believes that gold will outperform silver because that has occurred historically during hyperinflations from fiat collapse. Some would counter this argument by saying the fiat prices have never been so enormously rigged downward on precious metals prior to collapse, so fiat prices collapses are not representative of the current situation. What is your opinion on this question of gold versus silver in a collapse?
I think you've got to look back to how is silver priced? Silver is not being priced as a monetary metal. That effectively stopped in the last 20 years of the 19th century, a long, long time ago. And ever since then, gold has been the monetary metal. Now, having said that, silver is still a monetary metal. It's just not priced as such. And importantly, it's a monetary metal throughout Asia, which is really where our global future, I think, is going to come from. So that is one aspect of it. Another aspect of it is that traditionally, when you see moves in the price of gold, silver tends to move at something just under twice as much. So if you get a falling gold price, silver falls twice as much. If you get a rising gold price, silver rises twice as much. Now, recently, that hasn't been happening very much because we have had effectively a bull market in gold since December 2015. And yet the silver price, while it is off the lows, which were way down, I think the low sort of 14s, it's almost doing a double bottom. And that is what has given us a 90 plus gold-silver ratio. It's an interesting question. I think it's a trader's question, this one, as to when gold goes through the 1350 level convincingly, which I personally think we are testing and we will surmount that level, then will silver really start recovering and ratcheting up? I think it probably will. Now, the reason I say this, if you look at the commitment of traders figures, extraordinarily, gold is slightly overbought, which you would expect, but silver is still oversold. And this is an extraordinary situation. So I think in the short term, there is the potential for a massive bear squeeze on silver if gold does surmount that level. And I can see that, sort of calling into question the survivability of the shorts in the futures market. This is a major thing. And now quite why it is so suppressed, I'm not too sure. I suspect there is quite a lot of manipulation in the background. I mean, a long time ago, I looked at this question and I came to the conclusion that China in particular, as both a producer and an importer of silver, but also an important consumer of silver, being the major manufacturer of solar panels, felt that it was in its interest to keep the price suppressed. And I think that they are probably behind this. So this is going to be an interesting one. There is a huge catch-up to be taken. I don't think I'd bet the ranch on it, but I think as a trader, I would probably put a little bit of my money in there, if you like, to try and enhance returns. It's an interesting question. So thank you for asking it, Mr. Fuchs.
Sure. And we have a somewhat related question here, although this gets into broader topics. Pete Gerard asks, whereas some U.S.-based gold bugs plan ahead for possible government confiscation of their stack by buying numismatics or vaulting bullion offshore, I understand the Chinese government actively promotes its citizens to buy physical gold and hold it privately. Is this the case of one government wanting to preserve the wealth of its citizens, China, and the other one wanting to steal it, USA?
I think, Pete, that's an extremely interesting question. The US government, I think, like the European governments, has been in the position of transferring wealth from its people to itself through monetary inflation. And it doesn't want to challenge that by allowing people to own gold or encouraging them to own gold. China has taken the opposite view, and that is that if you persuade people, your citizens, to own gold, you probably end up with a stabler society, particularly when you've got more than 40 different ethnic groups across the whole country. So I think that is, if you like, the primary difference between the two. But also China has had, I think, this sort of if you like, sort of put on the dollar that, by owning a lot of gold, both as the state in undeclared reserves and also the state controlling the physical bullion market, but also individuals being encouraged to own gold, then they are, in a sense, insulated from a potential dollar catastrophe. And I think that's been very much their thinking. I think that thinking is probably going to be tested as the credit cycle evolves, and particularly if everybody goes deeply into recession. So China's response is going to be very interesting to those changed conditions. But otherwise, I think your basic view that America has this very, very different approach to gold, physical gold, discouraging people, and the threat of confiscation overhanging everybody, which I think is unlikely, but you never know. I mean, things do change. I think the difference with China's approach is very, very marked and a very interesting one.
There's a different question here about current fiat currency. Marco Street asked, it's often recommended to have cash on hand in the event of financial collapse when banks close their doors, preventing access to fiat currency. Besides having cash available for necessities, what kind of opportunities arise for the use of cash money, and how do we recognize the timing of when to execute and exit the cash investment?
Well, cash is not an investment. I think that's the first thing I must make absolutely clear. So cash is for spending. It is not an investment. It's a question, I think, of what you hoard. Now, you're prevented really from hoarding huge amounts of cash because your bank is instructed by the central bank not to permit you to do it. This is under the guise, if you like, of money laundering and all the rest of it. But the fact of the matter is that the last thing central banks want to see are people queuing around the block to take the money out of a bank. They would rather that you just did an electronic transfer from one bank account to another. They can handle that through the wholesale markets, but they can't handle a queue around the block trying to take physical cash out. But when that's going to happen, I mean, when we have a credit crisis, we have a systemic issue. I think that when that happens, you're probably too late to, run down to the bank and try and take cash out. I mean, if you're going to take cash out, then it's something I would suggest that you do over time. I personally would not go for cash for the very simple reason that the purchasing power of cash depends entirely on people's perception that the cash actually has value. There will be a brief moment, I'm sure, when you've got an enhanced systemic risk, when people think, oh, my goodness, we better hang on to cash. But I don't think that would last terribly long. And I think this is where gold and silver come in. If you have a portion of your hoard, if you like, your cash held in that form, then you can easily use that either directly or indirectly by turning it into cash at a later stage to purchase things. So I don't know that I've given you an entirely satisfactory answer, Marco.
I think you've touched several aspects of that that are quite helpful.
Good.
This one is related in the fact that it affects a lot of people in ordinary life situations. Cleta Smith asks, should the banks collapse, what happens to my home mortgage? Who would own my home mortgage afterwards, etc.? If the banks are left holding thousands upon thousands of mortgages, then what will they do with them when no one can pay their monthly bill?
That's a very interesting question. I think the two things to say, there's an old adage that, going back a long time ago, that if you owe the bank £100 or $100, you've got a problem. If, on the other hand, you owe $1 million, the bank has a problem. And I think that if you have a mortgage problem, Cleta, I think it's likely to be not just you, but everybody else. So there would be, if you like, a systemic problem. And I think that leads us to conclude that in that event, if a mortgage lender ends up in financial difficulties, then the government would have to effectively either take over the mortgage lender or to take over the assets, which is your mortgage, in some sort of arrangement. So I think you'd probably end up owing your mortgage to the government. Now, if you are in very good company, like everybody else is in the same situation, the government isn't actually going to lean on you to try to get that repaid. As long as you keep the minimum payments going through or what you've contractually agreed under your mortgage, there is absolutely no point in the government foreclosing. The government will have problems with people who do not continue to pay. And there will be quite a lot of those in those circumstances because we're talking about a systemic problem which is likely to lead to considerable unemployment, including the unemployment of mortgage holders. So I hope that answers your question, Cleta.
And one last question we have from CEB, who asks, I'm hearing so many different numbers about silver supply. Some say shortage, others say plenty above ground. What is the truth? And is India import demand going to force price discovery and break the COMEX manipulation?
I think the answer to this question is that most silver is produced as a byproduct of mining other metals, base metals, and the mining of those base metals, I think in total, has led to a gradual decline, if you like, in the rate of growth of the supply of silver. I think demand for silver is still increasing very strongly with respect to solar panels. I mean, I don't know what it's like in America, but this country is almost becoming carpeted with the damn things. So I think this just taking the supply-demand situation as a whole for silver, I do see it as being net positive. I think really I would have to leave my comment at that, CEB.
I guess I said that was the last question, but actually this one leads right on, which Ruby Honey asks, what is the best way forward to not participate in the fiat currency fraud?
Well, if you want to really speculate, then you might have a look at Bitcoin, because I am sure that a lot of millennials, as the situation deteriorates, they're going to look at Bitcoin and say, I don't want to have money sitting in the bank. I would rather have it in something which I can control, which is not a liability of the bank, and that could be Bitcoin. I think for the rest of us, perhaps with a more traditional approach to monetary matters, would take the view that quite simply you need to have a reserve of gold. I think particularly gold, because that is definitely accepted as a monetary metal. To a lesser extent, silver. I think silver is if you like, a speculative take on gold, if I can put it that way. But I would say that principally, I think for the ordinary person, the answer is have some gold.
Well, we've been speaking with Alasdair Macleod. He is the head of research at goldmoney.com. Alasdair, as always, our viewers appreciate your perspectives that you bring here to us on Reluctant Preppers, and thank you for joining us.
That was very much my pleasure, Donegan.
Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Hey, Reluctant Preppers, if you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Donegan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.